Slide number 7, the contract and documentation in our Indian communities. When we buy a piece of land or rent a small shop, we do not just rely on a simple verbal promise or a handshake. We know that property papers and lease agreements are very important because they protect our rights if something goes wrong in the future. We take those documents to a lawyer or a registrar to make sure everything is official. An insurance policy is also a very important legal paper that functions in a similar way. It is a promise that might last for 20 or 30 years. So it must be created very carefully according to the law. We must understand that an insurance policy is a legal contract, and every valid contract in India must follow specific rules to be enforceable in a court of law. Let us look closely at the five basic elements that make any contract valid under the law. These are the building blocks of the agreement between the customer and the company. The first element is offer and acceptance. This is the starting point where one person asks for insurance by submitting a form and the company agrees to provide it. The second element is consideration. In the insurance world, the consideration is the premium money that the customer pays in exchange for the company promise to pay for future losses. Without this exchange of value, the contract cannot exist. The third element is a Latin phrase called consensus ad idem. This simply means that both the customer and the insurance company must agree on the exact same thing in the same sense. There should be no confusion or hidden surprises about what is being covered. For example, if a customer thinks they are insuring a car, but the company thinks they are insuring a truck, there is no meeting of the minds and the contract is not valid. The fourth element is capacity. This means that the people entering the agreement must be legally allowed to do so. They must be adults who have reached the age of 18, and they must be of sound mind. A person who is not able to understand the contract cannot sign it. The fifth element is legality. The purpose of the contract must be legal. You cannot get insurance for a business that is against the law or for stolen goods. Now that we know what makes a contract valid, let us look at the actual flow of documentation in this session. The process begins with a document called the prospectus. You can think of this as a detailed brochure or an invitation to the public. It provides the initial information about the insurance plan and explains the key terms and conditions so that the customer knows what they are looking at before they decide to buy. It is the company way of being transparent from the very beginning. After reading the prospectus, the next step is the proposal form. This is the formal application submitted by the person who wants insurance. In legal terms, this proposal form is the official offer from the customer. It is a very important document because it contains all the personal details and the history of the risk being insured. As we learned earlier, the principle of utmost good faith applies here. So every answer in this form must be completely accurate and honest. Once the proposal form is submitted, it goes to the company for underwriting and acceptance. Insurer assesses the risk and decides whether they want to agree to the cover. If they are satisfied with the information, they will accept the proposal. But even after the company says yes, the cover does not start immediately. This brings us to one of the most important rules in the Indian insurance market, which is Section 64. VB of the Insurance Act. This rule is very strict and clearly states that there is no risk assumption without advance premium. This means that the insurance company is not responsible for any loss until they have received the premium payment in full. In our session, we call this payment the consideration. This rule ensures that the common pool of funds is always ready to pay claims. If a loss happens before the money reaches the company, the policy will not pay out. For example, if a customer gives a check for the premium, but the check bounces, there is no advance premium and therefore no insurance cover. This is why we always tell our clients to pay their premiums using reliable methods as early as possible. After the premium is paid, the company issues the final policy document. This is the formal contract and serves as the primary evidence of the agreement. It illustrates all the specific terms and conditions and benefits that customer will receive. It also contains the exclusions, which are the things the company will not pay for. This is the document that the customer must keep safely, as it is their proof of protection. If they ever need to make a claim, they will need to refer to this document to see the rules they agreed to. Finally, we must talk about the rules for Know Your Customer and anti-money laundering. Under the Prevention of Money Laundering Act of 2002, it is mandatory for the insurance company to verify the identity of every customer. This is why we ask for proof of identity, such as an Aadhaar card or a PAN card, along with proof of address and proof of income. These rules are in place to make sure that illegal money is not hidden inside insurance policies, and that the insurance business is not used for criminal activities. It is our duty as professional agents to ensure that we collect these documents correctly to keep the entire financial system safe and clean. We must explain to our clients that these checks are for their own protection and the protection of the country economy. In short, a policy is a formal legal agreement that follows a specific journey from the first brochure to the final evidence of the contract. It is a structured process that ensures fairness and legality at every step. It only becomes active when the premium is paid in advance and the identity of the customer is verified according to the law. By understanding this flow, we can help our clients navigate the paperwork with confidence and ensure their protection is legally sound and ready when they need it. Since we have mastered paperwork and the legal elements, let us move ahead to see the scientific process of how the company actually decides whether to accept a risk and how much to charge for this protection.